Welcome to Kitco News. I'm Niels Christensen. Joining us today to talk about gold and silver prices in these unprecedented times is Ole Hansen, head of commodity strategy at Saxo Bank. Thank you very much for joining us today, Ole.
Thank you for having me, Niels.
Um, okay, so let's get right into this. We've actually seen gold prices hold this $1,700 mark pretty well. Dips are being bought. What's your take on the price action in the gold market right now?
Well, I think we reached a little bit of a plateau here. We're pausing because we got some conflicting news pulling this market right now. We know that the physical demand out of some of the major buyers in China and India is on the weak side. We have this recent collapse or continued collapse in the crude oil price, which hit this historical negative level on Monday, having an impact on something like Brent crude, which is now down to the $20 level. Russia is counting for $40 to balance their budget. So there is obviously a risk that they may start to sell out of some of their gold. So that's adding a little bit of nervousness in the market. But I think overall we just had a little bit of another bout of risk off yesterday, not dash for cash as such, but just nervousness in the market, and that was really led by this collapse in the crude oil price, because it's just we're into unknown territories here. We are really at the stage now where we're risking company defaults, sovereign debt crisis, and what have you, if these oil prices are to stay this low for a longer time. And that's raising some concerns in the market that sold stocks off, and it also just temporarily took gold lower.
We see this unprecedented move in oil prices. So, is there risk of deflation? What does this do for the gold market if we're seeing a collapse of the global economy?
Well, the very cheap fuel prices is obviously keeping inflationary pressure at this stage under control. But I think against that, if we look a bit further out, and I think that's really from a gold investment perspective, it's not really what's happening today or tomorrow or next month. It's what you see what lies ahead in 6 to 12 months and beyond. And I think that horizon, if you look out that far, we are basically looking at we're entering into unknown territory. We have this phenomenal amount of monetization coming from the central banks, money being pumped into the system. Stock markets at deflated values, forward yield, forward dividend return expectations, which does not correspond to where the equity prices are right now. We have a yield curve control in the US coming in. What happens when inflation starts to pick up and yields can't go up? Then obviously real yields will have to go down, and I think that has been and will continue to be one of the key drivers for gold over the coming period. And so yes, we have right now, as I said, a stalemate, because there are some negative factors as well, but I think they will fade before the positive factors do.
Okay, so put your feet to the fire then. Long term, where do you see gold prices at? And I ask this as we see, a lot of firms come out with really bullish calls for gold prices. Where do you sit in the spectrum?
Well, I'm the kind of a cautionary guy, but if I may copy what my boss has written in some of his recent pieces, basically looking for 4,000 potentially over the coming years, because of this massive experiment that we're having, which we thought was bad for the last 10 years, which is going to get even worse in the future. The dollar strength is going to run out of steam. So the debasement there is going to have an impact, and then just the whole worry about the sovereign debts and what have you. So and inflation eventually picking up as well. So if ever there was a time where it made sense to at least put a part of your savings into something tangible, then I think that is now. So 4,000 probably a little bit far fetched as the world looks right now. But if you look years into the future, and then I think that is possible, because the repercussions of what we're going through right now with the pandemic and the aftermath is going to be something that's going to be felt for at least this generation and potentially beyond.
In more shorter terms, do you think we see all-time highs by the end of the year?
I think that's probably going to be a little bit of a stretch because I think the economic outlook at this stage is I think the world needs a longer time to get its bearings, finding its bearings again. And right now we still obviously have this liquidity support for the equity market. So even though we are quite lukewarm on the equities, and we think there's a risk of a new low there. The question is really how long it will take before we get there. And what I mentioned about the real yields probably being really the main kicker that can push it higher. I think that really won't happen until later on. But nearly 2,000 from the current level, I think there's probably going to be a stretch this year, but definitely not ruling it out in 2021.
So higher gold prices. What about silver? I mean, we see this sort of two-phase market in terrible industrial demand, but fantastic physical demand. How does this impact silver prices?
Well, for reference, I probably have more gold silver than I have gold. I am getting a little bit concerned about that at this stage because yes, it's historically cheap relative to gold. The ratio is very elevated compared to where we have been for over the past 5 years. So that obviously speaks for some kind of silver outperformance. But we just see these continued bouts of selling, which tend just to knock silver on its chin pretty hard, and we see these very big corrections, and it just shows that there's not really enough underlying strength in silver right now. Investment demand is strong. There's no doubt about that. ETF holdings continues to go up, but the question is really whether, if we are entering into a recessionary environment, which we will, how much if we are going to see silver actually make up some lost ground during that phase, because historically recession in precious metals tend to be beneficial to gold, but not so much to silver, obviously, from its industrial link.
So what price levels are you looking at for silver then?
Well, I think it's really it is primarily in the hands of gold. We did see this the sell-off we had last month in March, when it hit, what was it, nearly a 20-year low. That did attract quite a bit of buying. So it could potentially. It will track gold. If it should underperform further, then that obviously would have to come from weakness in industrial metals, and that's where I'm a little bit confused right now, because we have a recession coming, we have weaker demand, but we most certainly also have COVID-19 impact on supply. We have seen mines closing down or reducing activity. So weaker supply is meeting weaker demand, and the end result of that obviously remains to be seen. But I think it will more or less tracks gold. But whether we can see the ratio move back below 100, I'm probably starting to get a little bit concerned that may not happen anytime soon. And so on that basis, primarily we'll be tracking gold, but it is a higher beta in terms of the activity. So it's probably more a day trader's dream than it's a longer term investor's dream.
So basically, pay more attention to gold right now in this environment.
You have to, yes.
That's perfect, Ole. Thank you very much for your insights. Really appreciate talking with you today.
Thank you for having me, Niels, and see you soon.
Thank you very much for watching Kitco News. For all the latest information in the precious metals market, go to kitco.com. Stay safe, stay healthy.